Hey everyone, today my focus will be on order blocks. Now, if you are a day trader, understanding a few fundamental trading concepts can really give you an edge. If you get the hang of these concepts and apply or interpret them the right way, you could see a big boost in your trading game. In this video, I'm going to cover what I think are the two primary types of block orders or order blocks. It's the same principle here. These are, I think, the main building blocks that form the basis of understanding order block-based trading strategies. I will also briefly touch on the correct identification and drawing method for these patterns influenced by smart money, which I often refer to as high probability order blocks. I believe that these trading patterns, which are essential for any price action trader that wants to be successful, will assist you in understanding the markets better and perhaps help you make more informed entries. And trust me, once you figure out how these blocks work, you'll realize just how effective and easy to use they are. But before we dive into our first block, let's make sure everyone knows what we're talking about. Especially if you are new to day trading, you might be wondering what an order block is. Think of order blocks as being orders of securities broken down into smaller bits or blocks. These are then carried out at various price levels to avoid messing with the market balance. They show if big players like Goldman Sachs or JPMs of the world are buying or selling. Simply put, order blocks indicate where the big players, also known as smart money, would place their size orders to get into the game. It should be noted here that it's common for hedges or other big financial entities to trade using order blocks. So it makes sense for us, smaller guys, to try to spot them when we are thinking about going short or long in the market. You could picture order block as digital tracks left by big players on the chart. I think that by following these tracks or footprints, you can better guess where the market's heading and fine-tune your entries. However, many traders, particularly brand new ones, they fail to use order blocks effectively because they do, in a way, lack the understanding of what creates high probability order blocks. So let's address it. Basically, high probability blocks can lead to trade setups that are more likely to produce profitable outcomes. Order blocks are created basically by combining large volume orders with more precise price points, which again, once identified, can reduce the overall risk for traders. I believe that these types of order blocks, obviously if interpreted correctly, can be a great source of information in terms of market mechanics. And this is because each element within each order block carries significance and seamlessly feeds into the process of decision making when it comes to your trade entries. Using high probability order blocks has not only simplified this process, but also paved the way for consistent returns in my own trading journey. Now, let's introduce our first order block. As you can see from the chart, this is a standard bearish order block, which is identifiable through a single up candle right before a substantial slump in prices. This move here indicates that the market's momentum is shifting and control has been temporarily given to the supply side. Of course, this behavior isn't always indicative and doesn't mean every single bearish order block you identify in your chart will be a high probability one. But that doesn't mean we can examine them further for clues. See, the thing is, understanding price action, often, as you already know, referred to as the language of the market, can go a long way towards success when day trading. What I I mean by that is that after prices move upward, we see a quick reversal. Obviously, there is nothing unique about this shift, just price action reacting to supply and demand. However, this sharp advance here out of the order blocks range, remember, strong impulsive moves drive trends. So this move, driven by the supply side, overcoming demand and creating a liquidity imbalance on one side of the market. So this advance right here, especially if followed by a break in market structure, is quite significant. It is essential that you identify these two critical structural components within your high probability order block strategy. Now, the reason for that is because after the impulsive move, the break in market structure, which needless to say, is an important element in our order block strategy, since it occurs during a phase in which a transient price monopoly is disrupted by new order flow entering the market. So the combination of these two components, the impulsive move and a break in market structure, means that instead of one large group dominating the market, players of different sizes have been introduced into the mix, thus affecting price. The break in market structure is then followed by a high momentum bearish move, which unavoidably will create an inefficiency that the market will eventually balance at some point later on. Now, these components, including the manipulation aspect of this developing setup, which I will explain shortly. Now, all these structural elements make, in my view, this type of order block a high probability one. So after we see this displacement, what we do next is we start drawing a rectangle from the high point of the order block down to the low point, and obviously extend its range to the right. Now, when the price escapes the order block's range with high selling activity, it will base and reverse before going through a period of manipulation I mentioned earlier, which will make it look like the market is flipping from bearish to bullish. The thing is that this retracement isn't actually a sign that the market is changing its directional bias. In other words, it's going upwards, but rather a smart money, and this is a move that smart money always makes, and it's clearly an insidious move. So the smart money is at this point gaming the system so that they can take not only more liquidity as they suck longs and squeeze shorts on the way up, but also grab more orders at the zone or range of the order block before reversing and redumping the market in the opposite direction. And now this movement into the order block's range right over here signals a short entry with a stop loss, as you guessed, above the range. That said, though, guys, if we don't get this manipulative phase, then the setup is void. In other words, the trade loses its high probability aspect. On the other hand, when all the previously mentioned elements align, such as, again, an impulsive move, a break in market structure, and the manipulation phase, this sequence, from a structural standpoint, qualifies, always in my opinion here, qualifies these types of order blocks as high probability. In terms of what makes an order block low probability, obviously, if you don't observe a strong directional move out of the order block's base, then the bearish order block you are investigating probably isn't worth your time. Also, another thing worth noting here is that order blocks, be it bullish or bearish, are most effective on higher time frames, as this is where you will observe more clearly valid consolidations and accumulation of smart money size orders. All right, now let's briefly go over bullish order blocks and what characteristics make them high probability. Obviously, the concept behind a high probability bullish order block is the same as as that of a bearish one. In other words, we go through the same analytical thought process and structural factors used to identify a high probability bearish order blocks, but this time on the long side of the market. So looking at this chart illustration here, in a bullish market, the last down candle before a strong up move out of the order blocks range is what forms a bullish order block. Again, order blocks which determine the temporary dominant trend of the market are extremely important to the retail crowd, since they are a visual, I would say, a representation of what's actually taking place behind the scenes among central banks, market makers, and institutional investors. Being able to develop a sense of the overall market sentiment is, again, crucial for any trading strategy. Now, in terms of identifying a high probability green order block, several structural concepts come into play. Basically, a bullish order block is characterized by a strong upward movement driven by an impulsive wave of buying, followed by a break in the price structure and obviously a phase of manipulation. These structural components are, in my opinion, what define a bullish order block as high probability. Obviously, once these elements are identified, we start marking out the order block zone and extend it to the right. Now, if the price moves away from the base or range of the order block with strong buying momentum, it is likely to retrace back into the range after the manipulative phase of the smart money is completed. This allows them to grab more market orders before reversing higher. So patience is required in this scenario. I'd like to point out here that there are no guarantees that this setup will work every time, but I think it's more likely to be successful as a strategy if the price breaches the order block range. It is worth noting here that the bullish and bearish order block strategy bear similarities with the concept of supply and demand zones, but with some clear differences in trade mechanics. For instance, while supply and demand zones are usually identified by volume analysis and as a consequence areas within which the market has previously shown a strong reaction, order blocks involve more precision, often pinpointing specific price levels where size orders have been filled. Said differently, high probability order blocks, once spotted, allow you as a trader to become more surgical in your entries. And here I want to make one last point regarding the topic of order blocks. If the range of an order block, regardless of its bullish or bearish nature, if the range of an order block has already been breached, it is advisable not to trade it again upon a retest. I think that such a consideration would undermine the high probability aspect of the order block. And by the way, if you are looking to improve your order block trading and get better results, the next video featuring an order block trade will provide you with the additional information necessary to accomplish just that. All right, guys, that should do it for today. Thanks for watching, and as always, have a good one.